All righty. Today in the live stream from Lenders Online Training, David and I are covering one of our very favorite topics, red flags. And more importantly, how do you get your signals crossed when you see something that looks like a red flag? Maybe it is not. So in order to share this with you, we've picked 5 examples, very specific examples of something that could look bad, but maybe is not bad at all. We do a lot of this in the Lenders Online Training. We work with junior lenders. I am, by the way, Linda Keith, Chief Credit Trainer of Lenders Online Training, joined today by David Stoffaker, who is one of our senior trainers and does most of the virtual live meetings for our team. So before we jump into some examples, let me tell you why we believe that the whole red flags issue is so very critical. And it has to do with this. It speaks to a bias that is universal in lending and is actually more ubiquitous than any of the biases you might even think about. So we're not talking about religion, politics, race, part of the country, what clothes you wear, any of those things. We're talking about confirmation bias, which is where you jump to a conclusion a little too soon before you have the information you need. And the problem is that your brain is wired that once you've jumped to a conclusion, whether justified or not, your brain will look for more things to support the conclusion you've jumped to and will start actively disregarding anything that conflicts with it. So we as lending and credit professionals have to do everything possible to avoid triggering confirmation bias in our brains. So we are going to start out with, we got 5. I'm going to let David take the first 2, and then I'm going to take a couple, and then we'll see where we go from there. So David, a little bit about red flags, and then give us some examples.
Awesome, Linda. You know, Linda, metaphorically, red flags has often been a sign of some particular issue that needs to attract our attention. Yet in my mind, I've never thought it to be a problem in a sense. I mean, when a banker sees a so-called red flag, we train them to, it's a time to gear up your curiosity, maybe a pause, you know, a head scratcher to say, you know, I wonder why revenue went down this year. You know, in fact, actually, that's a great example. If you're comparing consecutive tax returns from, 2 years back to back and you see the revenue goes down, where do we go? Do we think, wow, maybe they had a bad year? Or do you actually pause and think like, revenue is down. I'm curious, maybe I want to understand or learn a little bit more about that. Kind of the go to the why, basically, so to speak. I mean, maybe revenue's down because you're a farming operation and you had just recently replanted your orchards or your vineyards. Now, honestly, if you did that, we might think that revenues are going to be down again this year. Might be. Maybe you're a manufacturing company and you're impacted by tariffs or supply chain disruptions. Now, we may think that that is temporary. Maybe it is, but definitely a point to pause. Maybe revenue could be down that the business in itself has retreated from a market segment that maybe they deemed wasn't as profitable anymore than the ones that they're actually into. So maybe their revenues went down, but maybe their profits went up. So revenue down is a great example. And I just gave you 3 possible reasonings. We make a point in Lenders Online Training. We work with our lenders and our analysts to say, develop a library, kind of interpretations, alternatives. So maybe these red flags are not really red flags at all. Linda.
And you almost have to have that library because it is natural for someone to go, oh my gosh, revenues are down. I remember once I was going into for a construction loan and 3 years tax returns. And the person's first thing she said was, wow, AGI is dropping year over year. What's going wrong? I immediately knew that she did not understand because it happens that when we were buying more and more real estate, we had more and more depreciation. And when you did the actual cash flow calculation, cash flow was up year over year. But before she even got there, she assumed a problem. So in the class, we always say red flag means you're curious, you need more information, and you need to resolve those red flags. Your management does want to know that you notice red flags, but also what was the resolution of that? Why is it not an issue this time? And having those few examples about why it might not be a problem will save you if you accidentally jump to that wrong conclusion. If you already said in your head, oh, shoot, revenue's down, this can't be good. I would love it if you could immediately say, oh, well, on the other hand, maybe it's down because of that orchard they built. Or maybe there's something else going on that's not a problem at all. Let me find out more. If you can switch to curiosity and away from concern, then you've won half the battle. I would like to point out, because so many of you on this call are in senior positions, it's not just negative, it's positive confirmation bias. So for example, somebody gets a loan to work on, somebody more experienced did it last year, they made the loan. The assumption might be, oh, well, we've lent to them before, so it's probably fine. We don't know that. So we're trying to avoid confirmation bias either direction, in a positive or negative way. And revenue down, great example. Let's see, what's my next one? Oh, mine is a dramatic drop in an important expense. So say you're zipping through and you notice the repairs and maintenance really took a dive. And you're thinking, whoa, that doesn't look good. They're not maintaining their equipment and so forth. Well, what if the reason it's down is because they replaced that old broken down equipment, and that is why they don't need to spend as much in that category. So it could be a problem. It might not be. We don't know yet, but I would like a lender or credit professional to go, that's an important expense. It's really dropped. I do need to understand why that's happening to decide if we have an issue or not. That was the second one. I'll go for 3. The third one is one of my favorites, and that is retained earnings is negative. So you've got a corporate partnership, S Corp return. You, for whatever reason, you go look at the balance sheets, or frankly, you're looking at CPA prepared balance sheets. Retained earnings is negative. Gosh, that doesn't sound good. Shouldn't we call it accumulated losses instead? It doesn't sound good, right? And yet, if you understand that these tax returns are created on a historical basis, so it's got the historical cost of that asset, and then it's depreciated over time, even if in fair market value, it is going up. So you can imagine you've got some real estate, fair market value is double what it was before, and you decide to refinance it to pull out some cash to do something else. There's nothing wrong with that necessarily, depending on whether you can afford the new debt. But what's going to happen to retained earnings? That we're not going to change that asset to its fair market value. It's still going to be at historical, less depreciation, but compared to the debt you were just able to take out, because loan to value was there, liquidity was there, all the other important issues, all of a sudden retained earnings has gone negative, and it actually does not mean that they've been spending too much money. So I see negative retained earnings. I immediately look up to see what kind of assets do they have? Does it look like they refinanced any of them? I'll go through a process to think about it, but I'm not jumping to the conclusion that the business is in trouble. All right, that's number 3. 2 to go. What do you got, David?
Well, this one might not be so obvious. It has to do with compensation of officers. Let's say a company has been very successful year after year, but it just seems that the officers' pay is really, really low, which would be unusual, right? It's a successful business. Now, you may see this with like an S corporation where the owners, they also can get paid through distributions. Now, distributions don't show up on the first page of the 1120. Yes. They also don't show up in the wages on the 1040. So if you're dealing with maybe a high percentage owner, let's be honest, they can kind of control where that money goes and how they get paid. So a common tax strategy that I've seen is they kind of try to put at least some money into distributions so they can legally avoid some payroll taxes. Nothing wrong with it, but it does draw my attention to that. So, it's a question is finding out some why. Here's another one that I actually came across this last year when I was working with a client that was looking to acquire a business. And actually, I was reviewing the tax returns of the seller, and I came across Form 4797, business sale of equipment. And I noticed that over the years, the seller had been selling a lot of equipment of late, which kind of drew my attention. I would think that I, myself, helping the buyer, wouldn't we be concerned about that, of equipment kind of being sold? I mean, a business buys assets to what? Generate sales. Sales are to generate profits. So if you have less assets, maybe you're going to have less sales and profits. Well, I mean, it could be that they were doing that. It could have been also the fact that they were actually replacing things. What I found out through some of the inquisitive questions was they actually were replacing some of the equipment, upgrading some technology. So, Linda, that was actually a green light.
It was a green light. And that's the interesting thing about it is these red flags can look red and they're not even neutral. They're actually green. Until you ask the questions, though, you don't know. And I'm going to add another thought to this, and that is relationship building between lending and credit professionals happens when you have the conversations with the borrowers. So every time you have a legitimate reason to say, gee, I see this is happening in your financial statements, tell me a little bit about what's going on, you get a conversation going. And I can promise you, having been a commercial borrower, that when I already have the relationship with the person that I work with at a financial institution, I'm very less likely to go somewhere else because, frankly, I don't want to train the next person about my business. If somebody understands my business already, I'm happy, and I will probably stay if I can. I want to give you another example of this compensation of officers. And this is an oddball one because it's my own personal story, and many of my personal stories seem to be oddball. But think about, David laughs. Think about the business I'm in. I'm in the business of training banks. Yep. So Great Recession, 2008, 2009, banking just tanks. Everybody's trying to protect their balance sheet. And so training took a huge hit. And there were a couple years there where the revenues of the business were way, 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 way down. And I, like many business owners, had to make a decision. Do I keep our staff? Do I keep, everything the way it was and somehow put capital into the business? Or how do I keep the business return ready when there is this temporary downturn, which we may see with tariff things and weather events and all kinds of reasons? I made the decision not to pay myself for 2 years. If you were looking at my personal tax return over those 2 years, and even then the third one when things got better, if you just average that, it would be way off. And you might look at that and go, geez, Louise, she's not even getting paid. Think about it this way. I was a business owner who had the ability to go 2 years without pay because of the strength of my net worth and my own personal balance sheet. And I had the willingness to take that hit because I wanted to maintain a strong business that would be there when the market came back. Shouldn't that be a positive thing? So again, red flag, you just got to look at it and go, okay, but what does that say about the owner of this business? That they are willing and able to put their own compensation sort of on the back burner while they maintain a strong company ready to roll. And isn't that the kind of business you're wanting to lend to? I kind of think so. All right. So bottom line. You want your people, you want you to be able to spot those red flags. What is an anomaly? Stay curious. Don't assume the worst. Have we call it a library of those green light alternatives that can help you when you've already slipped into a negative response. Then you need to resolve them one way or the other. And for those of the folks that are in our training that are at a basic level, I just say, you don't need to resolve it by yourself. This is when you go talk to your manager and say, I'm seeing something that's a little odd. Can you help me with it? And then that gives the more experienced person the opportunity to do that on the job, train on the judgment calls and the nuances. And then finally, document the heck out of this so that other people know, A, you saw it, B, what did you find out? And how did you resolve it based on judgment and not just a knee-jerk reaction? So red flags might be green lights. You can't afford to get your signals crossed. And frankly, when you do, you're going to decline good loans, and maybe you're going to make some that you wish you had. That's it for today. I have asked our producer to add the URL at the bottom of your screen to sign up for the Ask the Experts, which is our email version. When we get a question, we just got one on commercial real estate. And how do you look at those capital gains that you want to include? That's a great question. That's going to be a live stream, by the way. But that's the kind of thing that when we answer it, we send it out. It comes out, I think, every other week or every week. David probably knows. I don't. But a couple times a week, or a couple times a month in any case. And it always has the subject line is the question. So you or the team that you put into this will be able to look at that subject line and go, I don't care about commercial real estate, or, oh my gosh, this is exactly the question I had. So you can sign up for that. You also, of course, can send us your ideas for live streams, as well as any question that you have to experts at Lenders Online Training. And because we're on a LinkedIn live stream, you also can message us through LinkedIn and ask your questions. So lots of way to get the information you need to be able to say yes to good loans and make sure your team is on the same team as far as confidence, competence, consistency in pulling cash flow and making good loan decisions. That's it. Thanks, everybody.